Thank you for joining me. Today I want to show you a strategy that I've learned that I think it's the only strategy you need to be profitable. For me, trading with the trend, understanding reversals, and trying to ride trends is my bread and butter. There's other strategies that I like to play. I like to play breakouts. I like to play momentum. I like to play pre-market breakout. But riding the trend is my favorite strategy. And I'm going to show you my favorite indicators to identify trends. You can do this on Tradingview. The first indicator I would recommend is the chandelier exit. So you click that, and I already have default settings, but when you get this, all this is going to be pressed here like this. The only ones you need is the buy label below the bar and the sell label above the bar. Then for inputs, change the settings and put the ATR period for 1 and ATR multiplier for 1.85. Next indicator, moving averages, EMAs. I'm going to get 2 of them. And the first one will be the 9. And 9, I like to use purple for 9 and increase the thickness. And then for the second one, we'll change that to 20. And I'll use yellow for 20 because Tweety Bird. And change the thickness here. So now we have the 20 and the 9. Another indicator I like to add, the RSI. And you're going to add 2 of them. And I'm going to show you why. So on the first RSI, we're going to make this blue. Increase the thickness. And for input, we're going to put 100. And for this one down here, we're going to make it 25. And we're going to make it yellow and increase the thickness. Then we're going to go back up on this one. Hit the 3 dots and move to existing pane below. And just make sure that pin to scale is pin to scale Z. So now you have another indicator here. And then the last indicator, QQEMOD, and we'll leave the default settings. Then I'll kind of move this down a little bit. And now I'll show you my strategy. This strategy, there's most confidence is when you have A, a buy signal, B, a cross of the 9 moving average above the 20 moving average. So you see here the 9 purple cross the yellow. So this is perfect. We have a cross of the RSI, the 25 over the 100. That's another confirmation. So here's 1 confirmation of the EMA. We have a buy signal, increased volume, 3 confirmation of the RSI crossover, and 4, the white line is above the middle, and there's a blue bar here. This is a perfect entry. So we jump in here at 160. Stop loss is below this bar here, so 159. We're going to set here one more indicator, and this indicator is support and resistance. It automatically sets support and resistance lines for you. If you have 1,000 shares, I would say at the first resistance line, sell half, then hold the rest, and you could sell another quarter at another resistance line, and then just ride the rest. When do you exit? When you have a sell signal. But if you want to hold it during a sell signal, I would say if you're still bullish after you see a sell signal, it's the same thing in reverse. So this is just one part of the equation. The 9 hasn't crossed the yellow. This yellow RSI hasn't crossed. This white line hasn't dropped below, and there's no red bars. So it's still, this is a pullback. Some people, if you feel confident, you can buy as it bounces off the EMA here. It bounces off the 20 EMA. You can increase your position and feel comfortable because you're already in the green. So you would continue to hold, riding the 20 EMA. And where it would be, and this is another false signal because this yellow didn't cross the blue. And here, the white didn't cross below. So let's see when we would have our first official multi-signal. And here, it's actually when the market closes. We pull in here. So we see here the 9 crosses the yellow here. You see behind this bar, it crosses the yellow. There's a sell signal. The RSI here crosses the blue, and this white line is below, and we have our red signal. So the first true sell with multiple conviction is towards the end. So if we would have fully had confidence in the strategy and jumped in here at 160, let's say with 1,000 shares, and you sold 500 at 162, that's $1,000. Then another, let's say 250 at 165, that's another 1,250. And then you sold your other 250 here at 168. That's big profit. So let's look back another day. And another thing I recommend, if you probably look at the SPY the day before, you see here the SPY was on an uptrend. The QQQ was on an uptrend. You want to make sure that the overall market is not going against your trend. But let's try a different stock. Let's try Tesla. The morning here, there's nothing here that tells us confidence. There's a buy signal here, but there's no cross of the 9 over the 20. There's a brief cross here, kind of unstable, but this is still red. So this is against us. The EMAs are against us. So I wouldn't feel comfortable taking this place. Now, it's up to you. I look at it as each one of these is 25% more probability. So, for example, you got a buy signal. Okay, this is 25% thesis. I'm 25% confident. We have a cross here. Now I'm 50% confident. And that's where it stops because the EMAs don't cross and this is still red and the white is below. So if you want to take this, know that you're increasing your risk. You're going into something you're not 100% comfortable. And nothing's 100%, but I'm talking about probability. So if you're going to take a play like this and increase your risk, then I would just consider scalping. Very, very small position, quick in. Like if you jumped in here at 650, it spiked all the way to 666. So obviously there's room to scalp, but just know this is against you. The EMAs didn't cross. So go smaller size and take very, very small position and just take your profits quickly. Now here we have a crossover, the yellow over the blue. So it's bullish, but it's 25%. So there's nothing to add to that. But then here we have the purple, the 9 crossing over the 20 with a buy signal. So now we're at 75%. But if we look here, this is blue and the white is above. This is very confident. So right here would be a great entry at 656, spikes up to 669. So from 658 to 669, that's 10 points. So here, first resistance, take 50%. It spiked up all the way to 673, pulled back. Now here, this is your comfort level. Some people will feel confident buying more here. I wouldn't. If I held green, I'll just want to try to ride the trend. So would I sell here? I probably wouldn't sell here because there's no crossovers of the EMAs. There's a quick flush, but you see here it quickly got bought up. Quick flush, quickly got bought up. And you see the thin wick. This is a bullish sign. So it's spiking down, but people are buying it right up. So the EMAs didn't cross. The yellow didn't cross over the blue, and this is still blue. So you can still hold on comfortably. You see here, riding the trend, holding on. Now we get our first sell signal. We got a crossover of the EMAs. This is the only one that didn't cross, but this is red. So this is 3 different indicators, the sell, EMAs, and red. I would say, okay, get out of the position now. And this is 669. So here, if you want to sell, you get a sell signal here. We have here, the purple crosses the yellow crosses the blue, white goes red. So here you would buy some puts at 671, and you would feel comfortable riding the trend here. And then maybe here in this buy signal or taking partial in this resistance. But here's the absolute crossover where it seems to be bullish, where we have a crossover here, a blue here. So you would get out here definitely 100%, 638. But your entry was 672. Let's look one more here. So we got a buy signal. But this is just by itself. So you wouldn't buy right here because it's just 25%. You have here it's starting to uptrend. But if you wait a little bit, this is a 5-minute candle. So you wait about 20 minutes. On this one, you have the purple crossing the yellow. You have the yellow RSI crossing. And you have absolute confirmation down here that is blue with increase in volume. So this would be the best entry right here in this area at 624. You take your first profit here, 633. Maybe some more here at this resistance. And then just ride the rest until you get a few signals. You got a sell signal here. So maybe this will probably flush us out because we got a sell signal. Don't have a crossover of the EMAs, but we see some red here. So you may have gotten scared and gotten out of your position here. But if you, for example, sold half at this first and then a quarter here, if you just have a quarter left of your position, then you may feel more comfortable holding on here because you're already so green that you can hold on to the rest. And if you did that, here would be the absolute end point where the EMAs cross. There's a sell signal. This crosses down, the yellow crosses down, and this is red. That is my favorite way of anticipating, riding the trend. And in addition to that, I like to also build support lines to just affirm my position. So for example, if we go back to the screen here, if I was in this position, along with those indicators that I mentioned, you can easily build a support line and kind of do that here like this. And once that breaks, maybe get out right here once the support breaks. And if you're just holding a piece, like I said, I probably would have sold half at this first resistance and the other quarter, and then I'll probably feel comfortable riding it here. You see here, it bounced perfectly off this support. This one, it kind of flushed below it, but there's a long wick, so that tells me it's still bullish, people buying it up. Here, it also pulled back to the resistance, got bought up. That's the good thing about taking some profit during those areas of resistance. It'll allow you to have a small piece that you can hold comfortably towards the end. If you're doing it with options, then I would say, for example, Tesla, you decide to buy 4 options or 3 options. During the first resistance, sell one option, second resistance, sell another option, and then just ride the other one. Unless there's pure affirmation, crossover of the EMAs, breaks of the trend, crossover of the 2 RSIs, and red in the QQE mod signal, then why not just hold on to that one option because you're already up. Let's say you're up $1,000. The last one is pure profit. Even if it drops to break even, you still have the profit that you took earlier. So this is my absolute favorite strategy. These are free indicators on Tradingview. And thank you for watching. Make sure you trade live with me. I'll be starting back up next week after the holidays and can't wait to see you. Thank you.